China sends everything from needles to cars to the world, but there is one thing it lacks, which only the United States has. On April 2nd, 2025, US President Donald Trump appeared before the media at the White House with a big red card. This red card listed the names of some countries along with their tariff rates. President Trump read out each country's rate, and immediately, a wave of fear spread worldwide. The stock markets, including that of the US, crashed because this indicated the start of a massive war. A war where the weapon is power and the ammunition is money. Yes, this is what we can call a trade war or tariff war. Donald Trump made an indirect move that could bring the world's most powerful trade country, China, to its knees. If this trade war happens, which country will have the upper hand, China or the US? To understand this issue clearly, let's first understand tariffs. Most people think that tariffs are just a tax imposed on other countries, but in reality, it's an import duty that only applies to products being imported into the US. For example, if the US imposes a 26% tariff on India, this means that products coming from India will have a 26% tax applied in the US. Similarly, according to Trump's list, Pakistan's tariff rate is 29%, and at the top of the list is China with a 34% tariff. Imposing tariffs or import duties is not an abnormal practice. However, looking at the list, it's clear that India has already imposed a 52% tariff on US products. Pakistan has a 58% tariff, and China has a 67% tariff. The purpose of tariffs isn't just to make money by taxing products. It's a way to protect local industries. For example, Harley-Davidson, an American motorcycle brand, faces a 100% tax when imported into India. Let's assume that the price of a particular Harley-Davidson model is 1.5 Indian rupees lakh. Without the tax, it would be sold at the same price as a locally made Royal Enfield, making Harley-Davidson motorcycles cheaper. In such a case, the local motorcycle industry in India would suffer. By imposing a tariff, foreign bikes are intentionally made more expensive, thus protecting the local industry. There are several advantages to this approach. 1, the local industry remains active, and 2, foreign exchange savings are also achieved. The person importing an American bike will send US dollars to America, reducing the savings in foreign currency for India. Since the tariff is imposed by the US, products from other countries that enter the US will be more expensive, which in turn lowers their sales, and people will prefer buying locally made products. For instance, textiles from India and Pakistan sell in the US, but they could also be made locally in the US. The tax will result in a drop in sales for India and Pakistan's textile industry. The real target of Trump's tariffs seems to be China. This is because by the year 2000, American products were sold worldwide, but China now holds that status. Over time, not just America, but the entire world's business has shifted to China. Even the smallest things are now made in China and exported globally. Looking at trade between the US and China, in 2000, the US imported $80 billion worth of goods from China, while China imported only $4 billion worth of goods from the US. However, in 2025, the US imports $440 billion worth of goods from China, while China imports only $145 billion from the US. Trump's argument is that this trade should be balanced. In the year 2025, the US imports $440 billion worth of goods from China, while China imports just $145 billion worth of goods from the US. This difference of $295 billion is what is referred to as the trade deficit. To address this trade deficit, Trump has targeted China. The result will be that the price of products coming from China, including smartphones like Apple iPhones, will rise significantly in the US. As these products become more expensive, industries in China will shift back to the US. This is what Trump hopes to achieve, although it will likely lead to higher production costs in the US. However, China does not want this shift to happen. When Trump raised tariffs on Chinese products, China also imposed additional tariffs on American products. This is now looking like a full-scale trade war, with both countries locking horns. The US mainly imports technology items such as smartphones, laptops, electronics, and toys from China. If these products are not imported for some time, it may not hurt the US much. Even if these products are sourced from other countries, they will only be slightly more expensive. However, there is one product China imports from the US that is essential for its survival: soybeans. China has a population of 1.41 billion people, which is 315% higher than the US. To feed this population, China requires large quantities of wheat and rice. The problem is that China has only 13% of its land dedicated to agriculture, meaning that each Chinese citizen has just 0.23 acres of agricultural land. China's pig farming is the largest in the world, with over 400 million pigs in the country. These pigs require feed made of corn and soybeans. China imports 5 million tons of soybeans from the US every year. Soybeans cannot be imported from other countries easily because they are a crop that does not provide much profit to farmers. Soybean production is far more profitable in the US, which has a lot of available land. In the US, a person typically owns about 1.25 acres of land, whereas a Chinese person has access to just 0.23 acres. Therefore, the US not only meets its own food demand, but also exports soybeans to China. China has tried alternative feeds such as canola seeds, peanuts, and sunflower meals, but they are not as effective as soybeans. Currently, China is experimenting with insect farming to feed pigs, but this is still in the testing phase. China is a trade surplus economy, meaning it must sell its products to the world to survive. A trade surplus economy has a major disadvantage because it has too much to lose. On the other hand, the US, which is a consumer market, has many options available. If it stops importing from China, it can source the same products from other countries. Trump's previous tenure also saw tariffs on China, and it was evident that China was at a disadvantage. This time, Trump has all the cards needed to pressure China. Recently, it was reported that Trump has suspended tariffs on other countries for 90 days, but has increased the tariff on China to 125%, which shows that these tariffs are mainly aimed at China. What are your thoughts on this issue? Please leave your comments in the section below. We hope you like and share this video by ZMTV. See you in the next video.